As of right now, Monday, February 2nd, 2026, at approximately 10 a.m. Eastern Time, the live price for NVIDIA stock is $186.97. This represents an intraday move of roughly 2.18% to the downside from the previous close of $191.13. Trading volume is already surging past 4.2 million shares in the first half hour of the session, signaling that institutional players are making heavy adjustments to their portfolios right out of the gate. While most of the market expects the narrative of unyielding growth to carry the day, the reality we are seeing this morning is a bit more nuanced. There is a fascinating tension playing out in the market right now that most retail investors haven't fully grasped. We are seeing a massive divergence between the surface-level optimism and the mechanical reality of capital flows. Even as AI remains the dominant headline, NVIDIA is currently facing a localized trust but verify moment following comments from Jensen Huang regarding the company's $100 billion involvement with OpenAI. The expectation was a firm, binding commitment that would essentially lock in revenue for the next 2 years. The reality, however, is that this figure is a ceiling rather than a floor, and it's being approached incrementally. This slight pivot in rhetoric is exactly the kind of thing that makes the big desks at Fidelity and Schwab Intelligent Portfolios recalibrate their risk models. If you look at the board today, it's not just about chips. We are seeing broader market pressures as the Federal Reserve keeps interest rates in that 3.5 to 3.75% range. For a high-flying asset like NVIDIA stock, the cost of capital matters immensely, but the psychological weight of sticky rates matters even more. Investors using Interactive Brokers or the Robinhood app are seeing this play out in real time as the stock tests its 50-day moving average of $184.09. If you're into online investing, you know that these technical levels aren't just lines on a chart. They are the points where institutional buy orders either trigger or vanish. The common belief among many self-investing enthusiasts is that NVIDIA is an unstoppable force that will bypass any macroeconomic headwind. While the company's fundamentals remain incredibly robust, the contrary intake is that we are entering a phase of digestion. After the massive run-up to the 52-week high of $212.19, the market is no longer pricing NVIDIA based on what it can do, but on how perfectly it can execute. Any slight deviation from the perfect script leads to the kind of 2% intraday slips we are seeing this morning. Institutional activity reveals that while retail traders might be looking for investment help to time the bottom, the big funds, the ones managing Fidelity mutual funds and massive Fidelity ETFs, are often the ones providing the liquidity on these dips. They aren't necessarily dumping the stock, but they are rotating. We're seeing a shift from aggressive growth into more balanced individual brokerage strategies. This is a classic expectation versus reality trap. The expectation is a vertical climb. The reality is a jagged staircase. Let's talk about the specific catalysts of the last few hours. The market is chewing on the idea of vendor financing, the notion that NVIDIA might be funding its own customers to buy its own chips. This creates a feedback loop that looks great on an earnings report, but raises eyebrows among analysts who prefer organic, diversified demand. If you're checking your SoFi active investing account today, you might see the semiconductor sector as a whole underperforming. This isn't because the technology has failed, it's because the market is demanding a new reason to buy at these valuations. Looking at the broader landscape of online investment, there is a clear trend toward platform-based diversification. Whether you are using the Fidelity mobile app or the Robinhood trading platform, you've likely noticed that the correlation between Apple stock, Tesla stock, and NVIDIA is tighter than ever. When one of these titans breathes heavily, the entire index catches a cold. Today, NVIDIA is the one leading the breather. Despite the current 2% dip, it's worth remembering what this company actually is. At its core, NVIDIA isn't just a chip maker, it's the architect of the modern computing stack. Their Blackwell architecture and the upcoming Rubin platform are designed to be the backbone of AI factories. This is a business model built on high-margin hardware and increasingly high-margin software services. When we look back at the Q3 FY 2026 revenue of $57 billion, which was a 62% increase year over year, it's clear the engine is still firing. The question for someone doing self-investing is whether that engine is already fully priced in. The current P/E ratio sits around 46.4. By historical standards, for a company growing revenue at more than 60%, that's actually somewhat reasonable. However, the market is a forward-looking machine. It doesn't care about what happened last November. It cares about the $65 billion revenue projection for the next quarter. If there is even a hint that supply chain constraints or geopolitical trade shifts might hinder that number, the stock reacts violently. Comment below how many shares of NVIDIA stock you currently hold and what your average cost basis is. I'm curious to see who's been riding this since the double-digit days and who's just getting started. As we look toward the final hours of today's trading session, keep an eye on the $186.60 low. If we break below that, we could see a quick slide toward the 184 mark where the 50-day moving average sits. For those using the SoFi trading platform or Interactive Brokers trading tools, these are the zones where you'll see the highest volume clusters. The future outlook for NVIDIA is inextricably tied to the concept of sovereign AI, the idea that every nation needs its own domestic computing power. We've seen this reflected in recent budget discussions in emerging markets like India, where there is a massive push for semiconductor independence. This is a long-term catalyst that hasn't fully played out yet. While the daily swings are driven by headlines about OpenAI or Fed rates, the long-term reality is that the floor for chip demand is rising globally. In terms of risks, the primary concern remains the concentration of revenue. If a handful of hyperscalers decide to pull back on their capital expenditure, NVIDIA's growth could decelerate faster than the market is prepared for. This is the reality that often clashes with the expectation of perpetual 60% growth. Sophisticated investors using Fidelity Wealth Management or Schwab Intelligent Portfolios are often looking for ways to hedge this specific risk by perhaps looking into Fidelity IRAs or diversified ETFs that spread the AI bet across the entire supply chain. For the retail investor using a Robinhood account or engaging in online investing, the key is to separate the signal from the noise. The 2% drop today is noise in the grand scheme of a multi-year technology shift, but it is a signal of near-term exhaustion. The market needs to find a new equilibrium point where the price matches the updated growth projections. As we wrap up this analysis, let's summarize the core insights. We started with a live price of $186.97 and an intraday drop that caught many off guard. We saw how the reality of a non-binding $100 billion ceiling with OpenAI tempered the high expectations of a guaranteed windfall. We explored how institutional rotation in Fidelity and SoFi accounts is creating downward pressure as capital moves to find more efficient homes during this period of high interest rates. The contrast between the expectation of an unstoppable AI rally and the reality of a digestion phase is the defining theme of early 2026. NVIDIA remains the king of the mountain, but even kings have to pause for breath. The authoritative take here is simple. NVIDIA is currently a victim of its own success, where good news is no longer enough. Only extraordinary news moves the needle upward. Whether you are managing your own intelligent portfolio or seeking investment help through established firms like Fidelity Investments, the strategy remains the same. Watch the technical levels, ignore the hype, and focus on the execution. The tension between what the market wants to happen and what the data shows is happening is where the profit lives. Stay grounded, keep an eye on the volume, and remember that the most successful investors are those who can see the reality before the rest of the market catches up. NVIDIA stock is testing the resolve of the bulls today, and how it closes at 4 p.m. will tell us everything we need to know about the momentum for the rest of the week. Stay sharp and keep your individual brokerage accounts ready for whatever the afternoon volatility brings.